And once again, I want to say good morning, everyone. Thanks for coming. I know Saturdays, you've got to have probably better things to do on a Saturday morning than come and listen to me. So I really do appreciate it, you coming today. We're going to talk about today. This isn't a topic that should be that terrible difficult to understand, and we should be able to get it through this relatively quickly. But I get a lot of questions still on what do I do to plan an option trade. And so we're going to kind of go through that really quickly on what I do to plan an option trade, and how to get into the right place that you're picking up the right trade. Scott, no, I won't be touching on any scans. I spent pretty much the whole class Friday talking about scans and setting up to find trading candidates. If you're looking for a class on that, go to the website, get into the e-learning archives, look for a class that was called using TC2000 effectively. And I go through setting up a qualified watch list and things like that in that class. Okay. And everyone in here could probably, or most people in here that have been around for just a little while could answer this question. How many scans do you guys think I use? Bob S2. Yeah, I use almost no scans. I don't need to use scans if I build a qualified list of stocks that are doing the things that I do. That's right, I'm using my eyes, the eyeball scan. So I build a qualified list, and from that list is where I find virtually all of my trades. Okay, and I manage that list every single day. Every single day. Okay. I understand, Scott. You might want to again watch that video, and I could do a full class on that same thing we kind of did Friday, even though there's several in there that would be very similar that I've already covered. Those things on how to build a qualified watch list. As a matter of fact, Scott, if you've got my ebook, the ebook on consistent profits, there's a section in there on building a qualified watch list. And there's also videos to back that up on the YouTube channel. And you can access the correct videos directly from the ebook. And just as since I was doing that class, guys, I wanted to let everyone know. I passed on to TC2000 that I was going to be talking about TC2000, and they gave me a link, and I'm going to give that link to you guys right now. I don't care whether you are interested in TC2000 or not, that's fine. You don't have to be. But if you've ever thought about getting TC2000, and by the way, I think you're crazy not to use TC2000, because it is for the price one of the best charting platforms out there. They offered a $25 discount or coupon, basically, if you pick up TC2000. So if you buy the annual, it was what was it, 274 something if you buy the annual. So one good trade pays for it. It also works if you just do monthly. But I just wanted to share that with you guys. It was nice of them to send that. $274. Thank you, Joe. Really nice of them to send that, and take advantage of it if you have any interest in it at all. It's, to me, again, and we'll be working with TC2000 today, but it is without a doubt, for the money, the best charting platform out there for finding stocks and ETFs. It's not, you're not going to find currencies and things like that in it, but that's another thing. So, let's get into this. Let's talk about some of the rules and how we go through planning an option trade. And I only have just a few slides here, so we're not going to spend much time on slides. But I just wanted to go over just a quick thing here, that size of trades matters. And too many times, as I'm coaching folks, I realize or I quickly find out that they're trading way too large for their accounts. They're trading way too much. They believe that options give them the ability to solve all of their money problems because they don't have a very big account. And they think that just because options are relatively inexpensive by comparison to the stock, that they can wildly trade beyond what they really should be trading. And that's what gets a lot of people into trouble. I cannot even, I've literally talked or worked with hundreds of people that have been caught in that trap of trading too big. And that's one of the reasons why I show every day I'm trading an account that's $10,000, to show you that trading one contract, two contracts, can be just as effective percentage-wise over the course of the year than trading great big numbers of contracts. You don't have to do that. Keep your trades manageable, and remember that anytime you trade with leverage, it's a double-edged sword. And the rule that I go by here is about 3% of my account. And you guys have seen me talk about this before, but I actually divide my accounts up. Okay? And you don't have to use these numbers. Please figure out your own numbers. But I do about 80% of my account on one side and about 20% of my account on the other. Over here, I'm doing the more position, good quality swing trades, longer term holds, ETFs and things like that. Over here is where I'm taking the higher risk option trades, that kind of thing. And I use that 20% of my account, and I still use that rule of about only 3% of my account goes into any one trade off of that 20%. That prevents me from over trading. Now, as silly as it sounds, I named this one Stay Rich Money and this one Get Rich Money. Okay? Because this enhances my overall return on the entire account tremendously. Overall. Okay? So use options wisely. Do not get into the idea. It's okay if you want to trade your entire account. All you want to do is trade options and you don't want to trade stocks. That's fine. But continue to trade small positions. Because it only takes... I was working with a person this week in coaching that went through a whole pile of trades. Okay, I went through a whole pile of trades that he'd done, and he was winning at about a 50-50 ratio About half of his trades were wins and about half of his trades were losers. And it didn't make any sense to me because he kept saying, well, I'm a losing trader. And I kept looking at what he was showing me, and I said, how can you be a losing trader? You're winning 50% of the time. If you're managing your trades, you should be a winning trader. It's not going to be a fantastically winning trader, but you should be a winning trader. Well, that's when he revealed, well, I'm not sharing the worst ones. I said, well, let's take a look at those. So he had probably 60 trades where he was running about a 50-50 ratio. He had 5 trades where he had four-digit losses. So he was winning on the winning side, 200, 150, 300, 75, 150. But then he took several thousands of dollars of losses on 5 trades. And I said, well, what happened here? I said, where was your stop loss? And then he told me, well, I don't use a stop loss. And I said, well, how could these get so far out of hand? Well, I put $10,000 into each one of those trades. Now, trust me when I tell you this, he didn't have an account large enough to be putting $10,000 into any individual trade. And so it only took, out of all of those trades that he had made, about 5 of them to crush his account. And that's why we trade smaller positions. We trade smaller positions with manageable risks that we can trade. So size does matter in your trading. So some simple rules here that I want to go over for directional trades. If we're going to go long a directional trade, okay, we're going to look for a minimum of 60 to 65 days in the option contract. Okay. Now, it's okay with me if you're very, very confident in the trade, very, very confident on the market, that you cheat that a little bit lower. But just recognize what you're doing here. And if you do it as a constant habit, what you're going to find is your win-loss ratio starts to suffer. I've got the statistical work from years to prove that to you. If you stay in that 60 to 65 day minimum and give yourself an opportunity to be right on the direction, you will win more of your trades. Okay? Because option trading requires you to be not only right on direction, but also right on timing. And how many of you in this room would say right now that you're always right on direction and timing at the same time? I know I'm not. After all these years of trading, it's rare when I'm exactly right on direction and timing. Okay? And we have to be right. So giving ourselves a chance to be right is what we need to do, is give ourselves a little bit more time. Jared's never been wrong. All right, Jared. We're going to look for deltas between 70 and 80 deltas. 70 and 80 deltas just mathematically makes sense. A 70 delta tells us that that option has a 70% chance of still being in the money at expiration. Doesn't mean you can't lose money on it, but at least you don't fall out of the money very often where you can lose 100% of your trade. Okay, so somewhere between 70 to 80 deltas. It also tells us for a $1 move, that stock is going to move up, that option is going to move up by 70 to 80 cents, meaning we get 70 to 80% of a $1 move with our leverage product. Okay, open interest minimum of 10 times the size of your trade. If you're trading options that have very little open interest, you're just asking for a beating. And 10 times is a minimum. And I got to tell you, most of the time when you find something that's only got 10 times of what you're planning on trading, the bid-ask spread is so wide, you're nuts to trade it. So make sure you're focusing on that open interest. And always remember, if we're going to buy calls, we're going to buy those calls at or near price support. And if we're going to buy puts, we're going to buy those puts at or near price resistance. Okay. Bama, it is being recorded, yes. So if we're going to short options, and this is the last slide. If we're going to short some options, okay, and obviously we're going to, if we're using spreads, we have short options in them. We're going to look for the timing. When we sell that option, we only want to give the folks that we sell that to only 45 to 30 days, somewhere in that range, to be right. We want to give them a very short time to be correct on those options. We want to be selling deltas around 30 or less. That 30 delta tells us that that option has only a 30% chance of being in the money at expiration. Consequently, that means we have a 70% probability of winning that trade. Okay, so we give them as little time as possible to be right, and we give them very little chance of being right with our deltas. Bill, you can buy an option with 90 deltas. That's fine. But what's going to happen is if you take a look at your option chain, just study your option chain a little bit. You get up there in the 90s, and what generally happens? You're giving up some of the leverage, okay? Because you're paying up a lot for your option. But secondly, what typically happens is the market maker spreads out the bid ask. They don't want you to buy an option and have a 1-to-1 ratio. So what's going to happen is they're going to spread that bid ask out, and they make it difficult for you to make money. So just take a look at the option chain. As you move closer to 1, the bid ask spread gets wider. Happens every time. Almost every time. That bid ask spread will widen up. Okay? So right in there in that 70 to 80 delta range is kind of the sweet spot. It's also the sweet spot for gamma, and it's the sweet spot for theta. Okay? But it's okay with me. If you want to buy some 90 deltas, you can do that. Just focus in on those bid-ask prices. You're going to find a hard time finding bid-ask prices in those upper 90s that you're going to like. So if you're right on direction and it moves up, it gets hard to make money because the market maker spread out the bid-ask. Yeah, usually when I get up it toward those 90s, I either roll it down. I will roll it down toward that 70 delta, and then take a profit doing that. I'll sell the higher one, expensive one, and buy a cheaper one if I think it's going to continue to go up, or I just close the trade. I'm not sure which slide you were talking about there on where your sound cut out, but if you're selling an option, we're going to try and sell those options somewhere between 45 and 30 days to expiration. Trust. Let me just give you an example. I don't think Mike Peterson's here this morning. Mike Peterson started trading with a $20,000 account. I limited him to $600 per trade. Now I know what you're putting in there saying, come on, seriously, I can't, how can you make money doing that? Okay. He made a 65% return last year. His first year of trading. He made a 65% return, keeping his trades around 600 bucks. Now he moved those up slightly several months into the year, moved them up to 800, where he could go up to 800. Now, last year, trading a $10,000 account in Right Way Options right in front of everyone, trading 1 and 2 contracts at a time, we made a 95% return. Okay? So it can be done. I do it all the time. Even when I take a stock position, I'm usually somewhere between 3 and 4% of my account. Win-loss ratio, Art, was about 75. About 7 out of every 10 trades we won. In January, it was closer to 90%. Okay, but times change, right? The market shifts around. So I don't want anybody to think that we can't go below that. Okay, we can. But the point is that we recognize those times in the market and we slow down our trading when things aren't working. Okay. So here again on the sell short options and spreads, we're going to look for open interest minimum 10 times. Again, if you're trading something that is very illiquid, just plan on getting your head handed to you. And we're going to sell out of the money calls above price resistance. We want to get above that price resistance. That's where we're going to get that out of the money call, about 30 deltas or less. And when we sell out of the money puts, we're looking to sell those below price support. Okay? So some very simple basic rules to follow. And are these all the rules there is to trading options? No, there's not. But what I wanted to give you is just some of the basics here for some of those rules. Yeah, farming my list. Farming my list. Okay, so let's look at some charts. Let's take a look at this chart in PBR. Anybody like this chart in PBR? Pretty sweet, right? Now, you could choose or have chosen to purchase this on Friday, right? Would anyone agree this is a bullish engulfing candle reacting to price support and trend? Buyers stepping in. You could have purchased on Friday. You could also choose to wait till Monday if we get a follow through. See my alert right here? If I get a follow through, I may choose to buy it on Monday. Okay. It would also be perfectly acceptable, depending on how you trade. You could say, I want it to pop out, then pull back and hold here and buy it. You know, however you decide that you want to enter that trade. Okay. But what I'm going to do is I'm going to lay this out just the way it stands right now. And let's take a look at the options here on PBR and see if there's anything there that we even like. And I haven't looked at these. I have no idea if we would like these or not. Let's look at the Mays. Do you guys know why I went immediately to May? Because of the rule, 60 to 65 days. April's are too short. April's are getting close to being credit spreads. So I look to the Mays. I come here in the May and I've got that theoretical price model on there for, let's look at the open interest. Check it out. Oh, shoot. This is, I couldn't tell you. This is that paper trade, and they blank this out. So I couldn't tell you whether or not they have enough open interest in here. Let's assume that they do. Okay. If there's no open interest, obviously this is not a trade. You do not trade this. $13 has 900. Yeah, you can kind of see that from the bid-ask spread. The bid-ask spreads are pretty tight. So somewhere between this option right here with 70 deltas and this option here with 82 deltas. So right in here, these two would be the two that I would be looking at for a potential trade. All right, so let's take a look at that, and let's say we go ahead and buy. Would anyone think we could probably negotiate this trade down so we could get a buy point of about $1.90? Does that make sense? That we could get into that trade pretty close to $1.90. Look at the bid-ask spreads. I would always negotiate to try and get that best price, and I think $1.90, yeah, midpoint would be about where I'd want it. Okay, so we're looking at a 70 delta option. We're looking at about 190 per share in cost. Okay, so let's go ahead and take a look at the stock itself. Let's evaluate the stock itself. So when I'm planning a trade in an option, I'm also planning this just the same way I would if this was a stock trade. Okay, so if I'm looking to enter, let's say I got in just at the end of the day on Friday, about 14, let's just call it 14.20. So I got into that trade at 14.20, and I'm going to set my stop loss below this candle. If we put on the vol stop, you'll see that the vol stop is agreeing with that. Below that candle. Okay, that's price support, but we also have to look at the price action. So I'm going to be below that candle. Okay, below the price support. So I'm going to drop a line in here, and let's just adjust that around a little bit. I'm just going to call that about 13.50 is where I'm going to place my stop. So I'm in at 14.20. Okay, and I've got to stop at 13.50. Now on the stock itself, if I'm doing that, what's my risk in that trade percentage-wise on the stock? I'm going to be somewhere around 5% risk. That just short of 5% risk on the trade. In looking at this chart, does anybody think PBR has the potential of going up at least 2 times the risk of that trade? Would anyone agree? It's got the potential of going up at least 2 times the risk? Not if you're in it, Steve. And just so you know, it's unlikely that I will ever take a trade that has the potential of doing less than 2% of my risk. Or 2 times my risk, not 2%. Okay. Do you guys know why that's important? Let's say you have a 50-50 win-loss ratio. Okay? Out of every 10 trades, you win 5 and you lose 5 trades. If you're willing to risk $100 on a trade, that's your maximum loss that you're willing to lose. If on these 5 trades, you lose $500, okay, and on your winning trades, you average $1,000, are you a winning trader? Yeah. you netted 500 bucks. Okay. Now, obviously what you want to do is if you can start doing this, half of your trades, then the trick to winning and winning successfully consistently is working really hard to move this number to 6 and this one over to 4. And then slowly working those numbers back and forth. Just working that number, getting more and more proficient at your trading. But if you take trades, and you hear Rick talk about this all the time, but he does it in a little bit different way. How many of you have heard Rick in here say, if you guys are trading for 3, 4, 5% trades, that's a losing proposition? You ever heard him say that? That is likely not going to, you're not going to achieve success doing it. Right? And why is that? Because if you're planning a 3, 4, 5% trade, your risk is likely pretty close to 3, 4, 5%. Okay. So looking at this stock, I'm looking at this stock thinking I could trade this as a stock trade. All right. If I can trade it as a stock trade, as an option trader, I want to look and see if there's qualified options that I can trade. And we made the assumption that we have enough open interest and that I could trade this. Okay. And I'm looking about 190 per share to enter that trade. So if my stop loss is at 1350, what's the risk in my trade? First off, if I have a $20,000 account, how many contracts can I trade? Remember, size matters. Yeah, I can trade 3 contracts. 3 contracts, 190 divided by, or 600 divided by 190 is 3.157. So I got a calculator here. So you can trade 3 contracts and be within your $600 on your trade. Okay. So in that position, if I can trade 3 contracts, let's take a look at or decide what our risk tolerance is on the trade. Yeah, almost a prime number, yeah. Or a pi number, yeah. So let's take a look using the theoretical price model in here. If the stock goes down to 1350 and we get stopped out, what's our option going to be worth? So I'm going to change this column to the theoretical price model here. And by the way, when we switch over to TradeHawk, guys, we're going to have a tool that does this even simple. It'll be easier to determine what your theoretical value will be at a price. Okay. So on the theoretical value, all I have to do is move the price down to 1350. So I'm just going to, I hate the way this thing works. It's really, really slow to move this thing around. But I'm going to move this to 1350. Oop. There we go. We're at 1350. So this option I buy at 195. If the stock Monday, I'm already in it on Friday, if the stock Monday rolls down to 1350, how much do I lose? Okay, well, remember we got in at 190. Okay, so we can probably exit that trade at somewhere around 140. Okay. Yeah, Martin already put that in there, $50. $50 risk on a single contract. Okay. Now here's where your rules and guidelines come into play. Okay. We know that we can trade, if we're trading this with a $20,000 account, we can trade $600. But you may have set up your rules to say, I can't risk more than $100 in the trade. So if your risk tolerance is $100, you can't trade 3 contracts, can you? We're losing essentially $50 per contract on the trade. So the maximum you can trade here to stay within your rules is 2 contracts. Simple, right? It's simple if you have a plan. It's simple if you know what your rules are and your risk tolerances. If you don't know and you're just winging it, guess what happens? You get overstimulated because the market is all popping up and Kramer's been screaming buy, 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 and all this bells and whistles are going off on CNBC, and the market's popping up and there's all kinds of emotion, and you jump in and see that chart and you go, geez, I got to get that, and you buy 9 contracts or 10 contracts. And the stock starts to just wiggle down, and all of a sudden you look over there at your losses and you go, holy crap, what happened here? It hasn't even moved very far. Look what's happening to my account. Anita, we're buying at 190 and we're selling at 140. Okay. We negotiated our entry to 190. Always negotiate your entry. Okay, so in that situation, no, I understand. That's cool. Oh, you're looking at the stock. Yeah, we were looking at the options. Remember, this is about planning an option trade. Planning an option trade. Okay. So you have to decide. Now, if your risk tolerance is at least $150, you can take 3 contracts here. Is this making sense, guys? So we're planning this trade just exactly the way we would any stock trade, but we're using, all we're doing is replacing with options. Okay? But you have to have the rules. You have to know how much you can make in it, put into a trade and stay stable in your account. You have to know what your tolerance to risk is. How much are you willing to risk in the trade, lose? You have to know that prior to entering the trade. And with that information, you can put together a good quality trade setup that doesn't stress you out. It doesn't put you, into a big funk. Okay, now let's talk about one other thing here. When in relationship to planning a trade. Okay, what's the overall market doing at the time you're making this trade? Is it going to be harder for a stock trying to go up if the overall market is going down? Typically, yes. It's going to be harder for a stock to go up if the overall market is going down. That needs to be a consideration for your trading. Yeah, and the sector also. The sector also. So we want to make sure that we consider that, okay? And the reason I bring that up is because most people want to be long traders. We want the market to go up. We want stocks to go up. We don't want to trade short, okay? And that's normal. It's natural. Because most people have just been trained buy low, sell high. That's what they think of. Nobody thinks of sell high, buy low. Works exactly the same way, but nobody really thinks that way. Okay? Until you work through the training and kind of get it straight in your head. Well, and that's one of the purposes of the morning video, Val, is to help everyone set their position for the day. And that's why I do that planning every morning. It's really important to me. Okay? It's really important to me to consider the overall condition of the market. That sets my thinking for the day. It helps me focus on what should I be looking at today? What should I be doing today? Okay. Is there anyone here not subscribed to my YouTube channel? Just go over there and click the subscribe button. You're going to get it there first because it's loaded there first. So if you go over there and you click that, there's a red button that says subscribe, and when you click that red subscribe button, inside there'll be a little pop up, and inside there's a bell. Click the bell. If you click on the bell, every time I load something onto YouTube, you get a notification that a new video has been loaded, so you can get to it first. Now, I'm pretty quick about getting it out in the email and stuff after it's uploaded, but just in case, like on Friday, we had a website problem. I couldn't post it to the website. So if you're subscribed over there, you can always go get the video, okay? Because it'll always be there. Awesome, Art. Awesome. If anybody missed that, I'm going to give you guys that link here since Art just brought that up. I'm going to give you the link because I taught a class in TC2000 yesterday. They sent me a thing that said, hey, as kind of a thank you, I guess. Here you go. That you can go here and get your TC2000. If you've ever thought about it, it'd be a good time to do it and get $25 off. So no big deal. And I don't care whether you do it or not. If you've been thinking about it and looking for a good charting platform, there you go. So now we've got a plan. We're buying at 190. We're only going to risk about $50 a contract, somewhere around there. Remember, the theoretical price model is not perfect. Okay, if the implied volatility of the market changes or the stock changes, that will also change what that option would sell for. It's just going to get us in the ballpark. Okay, where we go now. The reason I wanted to show a chart like this is because it's really easy to look at a chart that has resistance above, right? That has resistance above and set targets. Okay, we can look in this chart right here, and if I drop a line right across here, you'll see where that hit resistance in current price over here. It was reacting to this price over here. We can see right in here, we were reacting to these prices right in here. Okay. So that's pretty easy to set a price target, but it's not so easy on a stock that has blue sky above. Now you can do a couple things. You could choose to do a Fibonacci retracement. Just pick that low and that high. Set your fibs out here and look for price targets. You could do that. Let me tell you what I typically am looking for when I do something like that. I'm going to look for a place up here that gives me close to somewhere around a 20% return. That's what I'm looking for. Okay. So at a 20% return, that means this stock, I just ran my little calculator there. Wish I could do that stuff in my head. I'm always amazed at people that can calculate stuff like that in their head. I can't, never have been able to, and I've accepted that. So that means that somewhere around $2.28 is $2.28 is a 20% return. So what if we come over here to our theoretical price model and we run this up? Let's go up $1. Up, see, $1 is too much. That's going to put us at about 260. Let's run this down. So there's 228. That's a 20% return on the trade. Okay, so that means the stock has to go to about 14.76. I'm just going to put 14.75 in here because I'm never worried about, whoops, the little pennies and digits like that. Okay. Whoop, 14.50. Just a second here. What did I do wrong? 14.76. Yeah, I was right. I just typed it in wrong. Wow. I said 50 and typed in 50, I guess. So about 14.76. That would be target 1. And I take a look at that chart and I go back in time and I see, am I going to have a problem getting up to there to that price? Well, I don't think so, because we're kind of in this mid-range here. There is resistance all the way back here, right at about that price. So I think I'm in pretty good shape, at least getting to 14.76, giving me a 20% return. So when I reach here, if I've got 3 contracts on, I'm going to take probably 1 to 2 contracts off right here. Are you going to go broke with a 20% return on a trade? Or are you going to let greed get in the way, not take any profit, and risk that chart popping up against there and turning right around and coming back down? And so I will set a conditional order in the market because I don't have time to watch it. If it moves up there, sell 1 or 2 contracts. $20 of the price, yeah, you're going to have to go a lot higher to get 20% in the stock. That's why options are awesome, because we don't have to move very far or move very much. We're moving under $1 to make a 20% return. Does anybody think that this stock can move up that far? Is that reasonable that it could move up that far in a couple of days? guys need to learn to use the platform. Theoretical price model, you just change one of your columns. Go to theoreticals and Greeks. There's the Theo price. Add that to your columns. And then the tool pops up here in your toolbar and you just open it up. Yes, of course, you always have to check earnings dates. You always have to check earnings dates. Always, always, always. So if I made 20% on my first contract, what would be another level up here that would make some sense to you guys? And this comes down to a personal decision. It doesn't have to be me telling you what that is. Figure that in. What I will typically do, some folks will try to double that. So the next one, they want a 40% return on the options. I do something a little bit less. I will look at a price that's somewhere around 30 to 35% for my second target. And so that means I'm going to look at about 250, 255, somewhere in there in the price. So all I have to do is come in here and raise this up until I reach about that 255 level. Oh, there's 256. So somewhere around 1511. So I'm just going to call it 1510. $15.10, second target. Once again, I'm going to pull back. I'm going to look, is there a reason that I can't make it there? And I think 1510 is going to be hitting a resistance level right about in there. So that would be a really good out for a second target. Right about there. Okay. Now, when I go to a third target, if I've taken 2 profits in a trade, if I go to a third target, then I'm going to loosen the trade up. Okay, I'm going to go for the big win. Okay, I'm going to manage that trade. Don't get me wrong. I'm going to manage that trade. I will make sure that last contract maintains a profit. But I'll let some of that profit pull back if it's pulling back to a support level before it can move on up. And that last contract or that last piece, I am often shooting for about a 75+% return. Okay. Does that make sense? And if I get up into there and it still looks strong, I'll let that continue to run. I'll just continue to manage that stop loss. Just a second, I'm looking for Judy's question. If I miss a question, guys, it's not a personal. Please understand, it's not personal. I need you to copy it and paste it back. It takes me so long to scroll back to find a question. Okay, what's the rule for earnings? How far out can earnings be before I will take a trade? All right. That's the question. How far will that be? So when you look at a chart like this, just use just a little common sense. How long do you think it's going to take for a stock to potentially, it doesn't have to move straight up there, but if it moves, how long do you think it's going to take it to move up here? Okay, we've got 20 days. Well, no, we don't. Do you think in 20 days it can make it up there? I mean, just think about it a little bit. Yeah, we've got plenty of time, I think, in that trade for this to move up into that area. Remember, stocks will often rally toward earnings. Okay? So it all depends on the setup. I can't tell you that there's a hard and fast rule. I've taken stocks that are trades that are 5 days to earnings with a great buy signal and the market screaming higher, and I know I can probably pull a profit out of it before earnings. Okay? The point is in this trade, don't let earnings, 17 days away prevent you from taking a trade. Just have the if the risk tolerance is right, if the trade fits you, then take the trade, but just have the rule that you're going to close this before earnings. Malcolm, you're exactly right. It's really, really, really important that you continue to maintain, okay? Maintain your discipline in your trading. And Bal, using terms like crushing, can one oil stock go up and others go down? Do they all move as a group? Yeah, they don't all move as a group. Okay. Don't make an assumption. You see a chart here. You can go ahead and decide that if you want, but don't make so many obstacles to potentially trade. How are you going to trade anything if you can come up with an obstacle anywhere you look? Now you can make that decision for yourself that I'm just not going to trade oil. Fine. That doesn't mean that stock can't go up. Okay. How many times have you guys looked at an indicator or thought something about an index or a stock or something like that there's just no way this can go up and it just keeps going up? You look at an indicator like MACD or something and it says it's overbought and it just continues to keep being overbought. Yeah, too many times. Exactly. What I'm trying to point out here is, are we setting up a trade? And here's where your question points need to come in. Okay? Do you believe PBR is trending? Do you believe PBR has a buy signal? In planning that trade and that buy signal, can you put together a trade that fits you personally and has a good risk reward in it? All right, that's what I'm trying to point out here. Now, you can put all kinds of other things on that you want to prevent you from making a trade. What I'm trying to display here is how we put together a possible trade. Okay? If you want to throw in all kinds of other stuff in here, well, cash is going down. Well, if cash is going down, cash should crush the entire market. Is it? No. That's exactly right, William. You have to base, and here's the other thing. If you believe overall the market is crummy, that it's not coming back, or any of those kind of things, should you be even looking at many long trades? Okay. So in that circumstance, you may look at the overall market and say, look, I'm just not going to trade until the market settles down. That's perfectly acceptable. All right. But that's not my point here. My point is helping you put together a trade plan that makes sense for you and your trading when you do find that trade that you like. Okay. So that's what we're going over here. If you want to put other obstacles in there for your personal trading, fine. I would ask you to make sure that you review that and see if that's working for you. Take care, Bama. Okay. See if it's working for you. Why is it that 100 people can make a trade on the same stock? Some people make money and some people lose money. Proper entry. Yep. Good trade planning. Proper management. That's why. So what I'm trying to show you here is just a way to plan a trade. Now, it doesn't have to be PBR. It can be any trade. I'm not telling you guys this is a trade for you. I'm telling you this trade, as it lays out currently, looks like a pretty decent trade. All right. Is it entirely possible this will just bounce around for a while? I think it could. I think it could bounce around in here and come over to trend. Okay. There's a lot of reasons not to buy. The one reason to buy is the trade fits you personally. It fits your risk tolerance. You see the buy signal. You see upside targets that are possible. So you put the trade on. To get a 35% return, William, on a 190 stock, 35% return is going to put that price right about here, up about 56 cents from 190, $1.90 entry price. %20 return puts us right in here on the trade. Okay. That's why. I mean, I'm just looking for a way to set prices. I'm looking for a way to set good quality exits that make sense where I can know that I can make money. Right? Now, one other thing for you guys to consider is when you're planning that trade is to consider your goal. Whoops. What's your goal for a trade? Now, if you're using TC2000, or not TC2000, but Trader Vision 2020, hopefully you've established some kind of a trade goal that you're trying to achieve. All right. When you place a trade like this, if you can achieve your goal in that first target, if I can achieve that goal in my first target, I will often take most of the trade off, 75% of the trade off. Because remember, my tactic is to always be profiting, consistently bringing in money. I have to pay my bills. Thank goodness my daughter is just about done with college. And my son is on his own. But I have bills to pay. I have to make money consistently. Okay? I need to make money consistently to continue to make my bills. So because of that, I'm always shooting for goals. If I can reach a goal, I will take the majority of that trade off, or all of the trade off if I have to take it off to reach my goal. Okay? Because remember, our total focus in trading has to be in improving that win-loss ratio. If we have to take an early profit to reach our goal and move that up 6 wins to 4 losses, I'm going to do that every time. I have to manage that. Okay. You're right, Alan. It may not be 2 to 1. It doesn't have to be 2 to 1. I wanted to make sure the stock had a potential to make me at least 2 to 1. If my target is up there, if I reach my goal on the trade, that's more important than anything else. I want to reach my goal consistently, over and over and over, reach my goal. Okay. Makes sense, guys? So that's an explanation of putting together, just a simple trade plan for a trade. Now, whether you actually go ahead and place conditional orders in the market for those exits, that's up to you. For me, that's important. I always place my first target out there somewhere around that 20%, Daniel, and I look in the chart itself to see if 20% is possible. Okay? Because I know if I can make 20% on most of my trades, I'm going to have a fabulous year. Okay? So that's just a target. My goal might be, $500 right here. So depending on how I trade this trade, how many contracts I trade, on this trade. If I can reach that number here, I'm going to take off all of the trade if I have to, but at least enough to achieve my goal. Okay. Now you can modify this. This isn't hard and fast rules or anything. You know, I think the hard and fast rules is making sure you know what your risk is, that you're trading the right size of position, that you understand that risk tolerance, and that you're making trades that are within your risk tolerance. Okay, and that you apply those rules consistently. Your management up here, this is always going to change for everyone. And it's going to change on every chart. You look at some charts and they have this great big potential move up there. Stocks with big gaps or something in them. Great big potential move. You have to make the decision. Are you going to try and hold it all the way for a 50% win? Or are you going to take some profits along the way? Okay, every chart is different. Every trade is different. You have to plan those trades individually. If I get up here and I get two targets, if I get 20% on my first and a 35% on my second, if it looks like the chart has the potential of making me 100% return, I'm going to let that run. Well, Daniel, think about that for a second. Are you trading the stock or are you trading the option? They're both going to have different targets for 20%. What's 20% of a $14.20 stock? You're going to have to go up to about 17 to get 20% on the stock. Do you think 17 is logical? I'm going to have to go to like a 2-day chart to even, well, looks like I'm going to have to go to a 3-day chart to even bring 17 into view up here. Does a 20% move, one time, a straight up move on a stock make sense to you? How often does that happen? But a 17% in an option is easy. Or I mean a 20% in an option. We went from $1.90 to $2.28. To make a 20%, $1.90 to $2.28 to make a 20% return on an option. So think about what it is that you're trading. Think about, the logic in that trading. I get people that I coach all the time that, and I don't know where they get this idea, but they come in with $5,000 and their expectation is to make $3,000 a month. Well, you can do that with options. Yeah, you can. If you're exactly right on every trade and bet everything that you have into every trade, yeah, it's possible. How many people are going to be right every time they trade? And we all know that's not going to happen, right? So be realistic in your goals and projections and what you can do. I tend to be much more conservative. Okay? And that works great for me. You will see me if I bought this trade right in here. I'm telling you I wouldn't, because this is still in a downtrend right here, right? But if I bought this trade right in here, see this pullback, hold the support, the buy signal? Had I bought that trade right here, I would have looked right here in the stock. Here, let me do this. Right here in the stock, and have seen that resistance. And when I get close to there, I'm taking my profit. That's how I trade. I'm going to take some of the trade off right there. And if I can make my money, my goal, whatever it is, to get to there, I'm out. Rick, you cannot apply. Go ahead and change it to 26%. How many times are you going to see an option go straight up to 26%? Are you going to find any other trades that you know of that you can, too many trades where you can risk so little for a potential return? And here's the thing, Rick, is if you're trying to apply percentages, we know we're trading small because of the high percentages. That's why we trade only about 3% of our account for the risk. Because, yes, it doesn't take much at all for a stock to move down and us lose 40% on an option. That's why we trade small. Okay? We trade small for that reason. Okay? If you want to try and hold for 26%, awesome, get her done. I'm just telling you, if you go through enough iterations of this, you're going to find that's not going to work very well, because most of them won't move up real quick for that 26%. Some do, some don't. It clearly did right here. Okay. CB, you're exactly correct that it does matter on time. Okay? But let's be realistic, guys. In a swing trade like this on a short term, remember, we're buying a May contract. How much time is going to come off of this in 2 weeks? Let's put this over here and move this option out for 2 weeks. Okay, what did we lose in that? Pennies. Now, if you were trading an option that only had a few days left, that's going to really affect that trade. But one of the reasons we trade with more time is to avoid the risk of theta. Okay? All this stuff relates, guys. Think about the reasons why we do these things. Why we do what we do. Greg, yes, you can. And that's one of the reasons why after a stock has moved up, you're going to find me selling. After a stock has moved up, you're going to find me selling an option out of the money to get paid to wait and cover the theta. Okay. But our theta in this trade is a penny. If we're right on direction, guys, and if it takes a full month for this to move, we're talking about pennies here that we're losing in the trade. Remember that if it moves in our direction, we're going to gain 70 cents for every dollar that it moves. That offsets our theta dramatically because we don't have a high theta. Again, guys, if you want to continue to throw obstacles in front of your trading all the time, you're never going to trade. You're going to be completely frozen in this position, unable to do anything. Now, I'm going to ask one more time on this trade. Does everyone agree PBR is trending? Does everyone agree that is a buy signal on PBR? Does everyone agree it has the potential to move up twice what we have to risk on the trade? Okay, so now put your trade together and see if it fits you. That's what you have to worry about. If you follow the rules and you buy enough time, you don't have to be all concerned about theta. I would be more concerned about a change of implied volatility, to be honest. Than I am theta. That's why we bought time, to avoid the theta as much as possible. Okay, it's a consideration. If you hold this too long, let's say all we did was buy an option that has only 30 days left to expiration. We've got a serious consideration here then on theta, right? Because we know by looking at a theta graph that theta really starts to pick up after 30 days to expiration. That means we've only got, before it really gets serious, 10 to 15 days to make that trade work. And it has to move to make that trade work. That's why we buy more time. We give ourselves more opportunity to be right. We give ourselves an opportunity to see a buy signal, and then the stock just goes sideways for a while and still produce a profit for us. Okay. Makes sense? So I just wanted to show you that I get questions all the time on this. And I think, what I'm seeing in some of the questions is what everybody is doing is you're throwing so many obstacles in front of your trading. I used to do that a lot. And I can tell you what that is. That is straight up analysis paralysis. You've gained so much knowledge about different aspects of trading, and you're trying to compare everything that you do and check it against all of those different metrics that you've learned over time. If you continue to do that, you guys, you'll be frozen. You will not trade. You have to go back to the basics of what we're talking about here. Do you like the chart? Is the chart trending? Is the price moving in your direction? Do you see a buy signal or a sell signal? Can you plan a trade that fits you? Make the trade. There's no guarantees in the market. None. That you're going to get every time, pick the right trade, the perfect entry, and all that kind of stuff. There's no guarantees. And stop trying to think that there is, because there's not. Too many factors in the world can affect what happens to that price of that stock. The best you can do is the chart working? Is it moving in a direction? Is the trend solid? Is it respecting support and resistance? Does the trade fit me? Place the trade and manage it. That's right, guys. Eyes on the prize and not the girls, and you will sometimes get hit. That's all there is to it. Okay. Yeah, I'm not ready to start showing Trade Hawk every day, Rich. I'm waiting for a tool to get built. Once that tool is finished up, I think we're really close. Where I'll be making the switch over and I'll be showing Trade Hawk every day. Tom, that really becomes a personal thing on the number of trades that you're willing to hold. Some people feel real uncomfortable holding many trades. Some people don't mind it at all. Okay. It comes down to a personal thing. Here's what I would tell you. That you should be trying to hold, at a minimum, somewhere around 5 trades at a time. And as soon as you can get yourself comfortable to be building up towards 7 trades, I highly recommend that. Now, when I say that, I'm saying you're not going to be sticking all of these trades in one sector. What we're trying to do is spread that around the market a little bit. Okay? We want to give ourselves more opportunity in a trade. Okay? Has anybody ever had on 5 to 7 trades at a time and it's only one trade that makes your monthly goal? One. Yeah. That happens a lot, right? So you have to have a little bit of money out there to make it work. Okay. You still have to manage those other trades that aren't really, either they're not working or they're not progressing or something like that. But it can be just that one trade that makes the difference for your month. Okay. So you decide what that level is. If you're following along with the rules that I'm talking about 3% of your account in any one trade, you're still not over invested here. CB, what's 20% of 190? Okay. That's a 20% profit on the trade. If you take 20% of 190, 1.90 times 0.20 is 38 cents. It's got to move up 38 cents. Unless you're doing something way different than, I don't know. That's 20% return to me. Hey, Mr. Bob, how you doing? Alan, what I'm trying to do by the 2-to-1, okay, is not necessarily a target. Okay, the 2-to-1 doesn't have anything to do with a target necessarily. I'm making sure that the stock has the potential of moving up 2 times what my risk is. Your target is something different. What I'm trying to do is making sure that when I put on a trade, I'm not risking in a trade that doesn't have the potential to at least return to me that kind of trade. Okay? I'm just making sure that we're not getting into a trade that has a cap that I can't make enough money on. Okay? So it's just another one of those rules that throws out a trade. It could be a perfectly good setup, but if I think that there is a major resistance up there and I'm risking and I have to risk more than my potential return, I'm not going to trade it. It may work out perfectly fine, but I'm not going to trade it. Okay? And that has nothing to do with your goal. Your goal is your personal goal that you set up. Just make sure that you have enough clear moving space here that you can potentially hit your goal. Your 2-to-1 might be up here, but your goal is right here. Get your goal. That's what you're after. Okay? Just make sure it has the potential to move up there, that you're not putting yourself in a trade that doesn't have potential. All right? Cool stuff. All right, guys. Well, I was going to try and keep this between an hour and a half, and we're already over an hour and a half. Any other quick questions I can finish up with? Hopefully this helped you a little bit in just working out the details of planning a trade. And here's the thing, guys. I know it seems cumbersome the first time you do this. Just trust me on this. Do it. You do that 10 times and it'll become second nature. Well, it won't become second nature doing it 10 times. But you do it 10 times, it becomes easier. You do it 20 times, it becomes easier than that. By the time you've done it 1,000 times, it's a no-brainer. You can almost do it in your sleep. Okay? But all we're doing is just trying to use a mechanical system to avoid the emotion, to avoid everything else, and just put together a trade. Does it fit you? Does it not fit you? If it doesn't fit you, move on. Find another chart. If you spend hours and hours and hours trying to find a trade that fits you and none of them fit you, what would that tell you? Probably not a good day to trade, right? If nothing is setting up and you're working like a dog trying to find something, wouldn't it tell you that, hey, today it might be better for me to just sit on my hands? trades aren't setting up. So you just have to keep working at this, and you do it over and over and over, repeat it over and over and over. Awesome. Awesome, Stan. Rick, yes, it is being recorded. Okay. So just get into that mechanical flow and just, and know, I know this, it seems like it's a lot of work, and it is. Okay. It is a lot of work. But if you do it repeatedly, it becomes so quick. It's not hard. We literally, Ed and I literally had to kind of drag Rick into trade planning. And now he'll tell you this. I wouldn't have a trade without a plan ever again. Because it's changed his trading. It's made him more profitable as a result, because he has a plan there that he's working with. There's no emotion in it. It's mechanical. We're just trading in a very methodical way. Okay? We're trading like a professional. All right, guys. Sweet, sweet, sweet. Thank you. Hey, just one more reminder to anyone listening right now that may have missed this. This is, whether you do it or not, I don't care. TC2000, that's what I use. That's what Rick uses. I highly recommend it. I think it's one of the best charting platforms out there for the price. They're giving you 25 bucks off a membership. So you can get a full year for like, it's under 300 bucks. It's 270 something for a full year of charts. 274. Yeah, cool. If you've had any interest in it at all, check out that link. And you got, I think William said, you got 30 days or until the first of the month. Yeah, you got about until the first of the month to be able to make that decision. So you don't have to rush either. Think about it if you're thinking about making that change. Also, let's see, what else? I passed on the link to my YouTube channel. Let me throw that in again. And if you guys have not subscribed to my YouTube channel, I recommend you do, because, just Friday we had trouble with the website and I wasn't able to post the morning note or the video on the website. If you subscribe and then once you click that subscribe button, click the bell within the subscription, and what it will do is it'll notify you when a video is uploaded, okay? Hey everyone, I want to thank you very much for being here today. Everyone take care, be safe, and we will see you bright and early Monday morning in the trading room. Thanks everyone. Have an awesome weekend.